Hey guys, what's up? So I'm going to be making this video today explaining my fibs in detail, Fibonacci retracement. So I've already made a video in the past, explaining every single level and how I use my fibs in detail, but a lot of people had more questions to ask, recently, all the trades that have been happening, they're very curious to see and, ask more questions on how I use my fibs. So I'm just going to make another video over here. So, I've been preaching this pattern for a long time, which aligns with Fibonacci also. This low to high, low, high, low, high, which is basically what we have here is a bullish trend, right? You make your high over here, you make your low over here. But the thing is that it's not always going to be this clean. It's not always going to be this, because if it was this clean, it would be just so easy to win. So it's going to be more like this. It's going to make a high, and then it's going to do this, 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 and then it's going to do this. You don't know. Oops, sorry. It's going to respect this low over here. So it's going to come down all the way until here and then go up. Ignore this low over here. So because if we broke this low over here, I mean, it could be a fake out, but generally, the idea is that you want it to respect the previous low over here. So the question now that I was asked is, how do you know which fib level is going to respect? Because we know that one of them is going to respect. Either it's going to be the 23, the 38, 50, 61, or the major 78.6. The 88.6, it can happen that, price can retrace all the way until here and then, make its way back up all the way until here. It's more rare, but when the market is too crowded, when the trade is too crowded, and the big players, they want to push price up, or to over here and beyond, then they might push price to the 88, to the maximum before going up. But like I said, it's more rare. So how do I know which fib level is going to respect? The answer is fundamentals. The answer is, how excited is the market? What's going on in the market? What's the fundamental idea and the fundamental agenda? And it's super, super important for you to know what's going on, because, I see a lot of traders that, there's a lot of gurus that preach, the 50 and the 61.8. This is their golden zone, whatever they call it. They're going to take buys over here, put their stop loss super tight. They're going to place their TP over here. Like, all of this stuff is really amateur rookie trading. Like, you might have a few trades that are going to play out because, the 50 and 61 are pretty strong levels, but the big players and the algos, they know this stuff. They know that people are buying these levels. So if there's no fundamental idea behind why you're buying over here, then it's not really smart, and you have to be very lucky for the trade to go your way, because it can just stop you out here, or go a bit over here and then it's going to go up. So you really have to know what's going on, what's the fundamental idea behind why you're taking the trade. So I'm going to place this fib over here. Like I said, there's always one level that is going to, play out. So in this case, you have the 61.8. For me, a full play out, like, a beautiful fib is, you make your way up, one of the level rejects, and then you make your way to the 27. That for me is like, after this, I would move on to my next leg. Like, until we don't tap the 27 over here, like, this leg for me is still valid. Like, I can take the next leg also if we break the zero, this high over here. Like, if we were to come up over here, then I can take this leg like this also, right? Like, I can place a fib like this also, from this low to this high. But this fib here for me will always stay valid until we hit the 27.2. So in this case, I'm just going to put it again so it's more clear. You can see that the 61.8 did have some nice rejection over here, 14 May. Not exactly sure if I remember what the fundamental idea was, but it has to probably be with, the geopolitical tensions that were going on. Yeah, it was probably that, for around 14 May. So, you know, if you have, geopolitical tensions, rate cuts, stuff like that, then that, price is going to be super, super bullish, and that, gold is going to go up. So you really have to keep an eye on that. And the thing is that, how do you know exactly which level? That I explained it in one of my previous videos, but I'm just going to tell you guys again. Like, if the market is super, super excited, like, there's big, war stuff going on. Like the market doesn't have time to retrace all the way back to the 61 to the 78.6. It just doesn't have time. It's really, really excited, and generally it's going to be the 23, the 38, and maximum I would say the 50. Now I'm talking about the higher time frame fibs, the weekly, the daily, and the H4. I'm not talking about the 15-minute fibs, because if you go on the lower time frame fibs, you're gonna see that most fibs they make their way down to the 61 or the 78.6. So like I'm really talking about the higher time frame fibs. I don't even place my fibs on the lower time frame. If I do, it's just to get more precision on an entry. But in general, I'm gonna have my higher time frame fibs all the time. So I'm gonna place this over here. In this case, clean off the 61.8. Beautiful rejection. You can see it was a sniper and then made its way up after. So, there's a lot of people, like I said, who are just blindly gonna enter. Their strategy basically revolves around, I'm just gonna enter off the 50 or the 61.8. And you might get lucky a few times because, obviously one of these levels is gonna play out. But, your win rate is gonna be terrible. It's gonna be, maybe 15-20% win rate, and it's just not going to last a long time. So you really have to know what the fundamental idea is behind why you're taking the trade. Why are you entering at this fib over here or this fib over here? And then that's going to increase your win rate over time, and it's going to give you a better understanding also of what you're doing. So I just want to mention one more thing here. This fib over here that we have, this daily fib, you can see that it's not clear. It's not like we go up and then we come down and then we go up. Like, I'm going to place my fib back over here. You can see that there's a reaction off a lot of these levels. So you can see we went up over here, and then you see the 38.2 over here, right? You can see all these wicks over here, and money's coming in over here, pumping in, and you see it's like really big reactions. Like this is 700 pips, almost 800 pips. So we have almost a reaction at every fib. So that shows how powerful these levels are. And if you align these with the fundamental idea, then that you're going to increase the odds of you winning the trade. Now, what must have happened here is that when we came down over here, since the market was super, super excited, you can see over here, we must have had some fundamental reason. 25 April, I believe it was the war tensions. So you can see over here, we had a lot of rejection at the 38.2, which is, an excitement level. So we had a rejection, but, it ended up coming down to the 50. And when it came to the 50, you can see that there was an even bigger reaction over here, right? Because it must have aligned with the fundamentals. And 50 in general, is one of the best levels, right? Because you're coming to the equilibrium, you're in a discounted price, at a discounted price. So here you saw there was a big reaction. We went all the way up, but we didn't break structure, and we didn't go all the way up until here. And even if you're taking a trade, entering here and targeting, this level here, like this is like 4,000 pips, it's a huge trade. It's more like for swing traders, or like, traders that hold like beyond, a few months, maybe, like 1 or 2 months. Like what you can do is you can place your major fib and target your levels. And what you can do is you can go down to the lower time frame fibs. I'd say like 1 hour, 30 minutes if you have to, and try to find a better entry, right? Try to find an entry where your take profit is smaller. So let's take this for example, right? Let's say if you were to enter, I don't know, here at this 50, right? Let's just say you entered at this 50 and your target was over here. This is a good target, right? Because on the higher time frame fib, it's your 0, and on the lower time frame fib, you have your TP1. So the TP is way smaller as compared to, holding all the way until here. So this is how I combine my fibs basically. When I have a confluence on the fibs also, like, let me just take for example this. Let's say if you're placing your fibs and you see something like this, you see your higher time frame fibs and your lower time frame fibs, you have some kind of confluence like this. Like for me, this is a really, really strong level. And on top of that, if you combine it with 3840 over here, you can see it's a nice psychological level. 3830 over here, so that there's definitely going to be some kind of reaction over here. Now the edge is that if you have all your technicals like this, which is super, super easy to place, You know, it's just basic market structure. And on top of that, your edge, which is fundamentals, it aligns. You know, you put your odds of winning to like 80, 85% chance, which is really, really good odds. So that's basically the edge. That's what I wanted to make. You know, I wanted to make this video to clarify that once again, how do I know which level is gonna respect? It always comes down to the fundamental idea for me. And then, you know, at every level, if I have confluences, then, you know, I just play my odds. You know, I'm gonna enter off one of these levels and I'm gonna play my chances for the trade to succeed. Thanks for watching, guys.